Welcome back, YouTube. My name is Nigel Schroeter, and I'm going to bring you guys 10 reasons or 10 ways, 10 methods that you are not getting approved for high limit cards. And these are the solutions this time. The last time I gave you three main reasons why you're not getting approved for high limit cards. This time I'm giving you the 10 solutions to those three main reasons. And these methods are going to allow you to finesse your way into high limit credit cards. These are the methods that have gotten myself and my subscribers into high limit cards, $10,000, $8,000, $25,000 approvals. All right. So I want you guys to take heed to this video. Please, please, please watch the entire video because I'm going to be giving out the best secrets at the end. So first off, the first way that you obviously can get around to get a high limit card is going through credit repair. All right, so credit repair is going to be a great method because you can use credit repair to get all the negative stuff wiped off your report, anything that you've messed up in the past, any of the stuff that you see on your report that is fraudulent, whatever it is, anything that's on your report that you need to get repaired, you can get repaired. Remember, you can only get certain things removed off of your report legally. However, sometimes your credit repair company may be able to negotiate with your debtors and get other things removed off your report as well, because they understand people make mistakes. And if you're willing to own up to those mistakes, there is great ability for you to be able to grow there. All right, now next, go through credit repair. You are going to want to actually get an AU if this is possible for you. So if you can get an AU, I always tell everyone get a free AU. If not, don't pay for one because most of these that are out here are overpriced. But if you have a family member who can give you an AU, go for that AU. Number three, you want to limit any unsecured debt on your report. So what does that mean? Limit the amount of personal loans, and loans, debt consolidation loans and things like that are on your report, because those on your report look risky to lenders. So that can actually cause them to give you lower limit cards in the future if you're actually opening up personal loans, and especially having them open for extended periods of time, and their unsecured personal loans. So limit your personal loans. And next, gardening. So number four is going to be gardening. So make sure that you take time out to garden. Now, what is gardening? Gardening is giving your report time to grow. So you want to allow your report to age. You want to take at least 3 to 6 months between every application. If not, take longer. The longer you wait, the better the crop is going to be. So the longer you wait, the better the cards you're going to be able to get approved for, because it's going to show that you're not rushing out, you're not in need of debt, you're not in need of credit, and that's going to give the banks the ability to give you higher limit approvals. Number five is getting secured debt to build up your report. So if you don't have a lot of trade lines, you haven't really demonstrated any credit at all, get a secured card, get a secured loan, take advantage of those secured options that are out there on the market. Number six is going to be to value your inquiries. So what do I mean value your inquiries? I was talking to someone And I had been on a credit spree, and I applied for, probably 6 cards and got approved for all of them, but they weren't very high limits. And with getting approved for all of them, having good income, having a good profile, and I'm like, why are my limits not what I want? And I'm talking to someone, they're like, well, you applied for 6 cards at one time. So what you did was you devalued your inquiries because you did them so closely together that the banks are looking at this as a risk when they see you, because you've done this before. So they see you coming and they're like, "Oh, this guy's a risk. We don't want to give him a bunch of money because we don't know, he might just randomly crash one day. So instead of giving him 10,000, we'll give him 2,500 because we know he's going to apply for 4 or 5 cards at one time." So make sure that you're aware of that and you're paying attention to that when you're applying for credit, um, because you don't want to look as you though you're a risk. So you want to value your inquiries. Say, okay, I want my inquiries to be worth 10,000 for every card that I get approved for. So now, with putting more value on your inquiries, it's going to stop you from applying to just anything and just anywhere. It's going to make you want to apply to those prime cards, those Visa signatures and things of that nature that are going to give you 5,000 and up. Um, it really honed you in to valuing your inquiries. Um, so what's the next thing? The next thing is number 6 is your household income. If you are over 21 and you're doing an application, um, use your household income. Where allowed. If that bank allows you to use your household income, use your household income. The higher your income, the better your chances are of getting approved for a high limit card. So you may make 40,000 and your significant other may make 40,000. Now you can put 80,000 on your application rather than putting 40,000. How much more of a limit do you think you're going to get when you use your debt to income ratio with the household income? It's going to make a huge difference when you're able to use your household income along with your debt to income ratio. It's going to drop your debt to income ratio so much lower. And that's actually going to be number 7, is make sure that you have a low debt to income ratio. Keeping that low debt to income ratio um, is going to allow you to get approved for higher cards, because the lower your debt to income ratio, the lower of a risk you are to the banks. And when you're a lower risk to the banks, they're more likely to approve you. Um, so make sure that you're taking advantage of that. Sorry, that was number 8. Number 9. And this is a good old trick that I keep up my sleeve. Hide your utilization. So if you have a card with high utilization, um, you know, figure out a method that works for you to hide your utilization. Rather that be moving it to another card, rather that be, cycling your paychecks with your credit card, post dates or statement dates, whatever you have to do to hide that utilization, hide that utilization. When you're hiding that utilization, you're going to in turn be lowering your debt to income ratio as well as lowering your utilization, which is your second largest credit factor on your report. And when you lower your utilization, you increase your chance of getting approved for a high limit. Certain banks pull your previous month's credit reports to see if they were posting high limits. So when they pull those reports and see that they're not posting high limits every month, it gives you higher chances to get approved for high limits. And last but not least, and probably the biggest gem out of this whole video, something that no one is going to tell you, is only apply for credit when you don't need it. And you're probably like, what? What? That makes no sense. Why would I apply for it when I don't need? When you apply for credit when you don't need it, it does two things. One, it makes you have to hustle because you have to figure out how you're going to pay that interest on whatever loan or whatever it is that you get, or how you're going to purpose that line of credit. So it brings out more hustle in you. It's going to make you make more money because you have that line of credit, you have that loan, you have whatever it is, and now you don't need it. So rather than just give it back to the bank, you're trying to figure out how you can profit off of it before you give it back to the bank. So that's going to be a big thing, is applying for credit when you don't need it, as well as when you're applying for credit when you don't need it. When you do end up in a situation, you've already got, $10,000 into the side. You've already got $100,000 in credit cards off to the side. You've already got a reserve set up to help you if anything is ever to actually occur that's going to cause you to use it. So apply for that credit when you don't need it. When you're applying for credit when you need it, you look riskier. The banks can tell you need it. You're not fooling anyone. You're only fooling yourself. So with that being said, thank you all for watching. Thank you all for tuning in. Thank you all for the support. We'll see you guys in the next video.